Imagine a future where investing in XRP is as easy as buying a stock. No complicated wallets, no private keys, and no stress over securing your assets. Just one tap in your brokerage account, and you hold a piece of the future of finance. That future seemed closer than ever until the U.S. Securities and Exchange Commission once again pressed pause on XRP ETF approvals. For investors, this decision is more than a delay, it's a signal, a preview of how regulatory forces may shape the trajectory of XRP and the broader altcoin market in the months to come. Hey guys, welcome back to Whiteboard Crypto Update. In today's video, we will talk about XRP future. So be sure to stay focused, as you surely don't want to miss out on this. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads. Please remember, this is not a financial advice video. The SEC has recently announced a delay in its decision regarding several proposed spot ETFs, including those tied to XRP. Two notable applications come from Grayscale and 21 Shares, both of which aim to launch ETFs that directly track the price of XRP. These proposals are designed to bring XRP into the traditional finance ecosystem, enabling investors to gain exposure to the cryptocurrency without actually owning it. The third application affected by this delay involves a proposed Dogecoin ETF, but our focus here remains solely on XRP. To understand the implications of this delay, it is essential to grasp how the SEC's approval process works. When an application for a new ETF is submitted, the SEC has up to 240 days to approve, deny, or delay a decision. These delays are not uncommon, especially when the underlying asset is a cryptocurrency. The SEC typically opens a period for public comments lasting 21 days after the proposal is published in the Federal Register. Following this is a 35-day rebuttal period, during which responses to public comments are reviewed. These windows are part of the regulatory process and allow stakeholders, ranging from institutional investors to individual retail traders, to voice their opinions. Historically, the SEC has cited several concerns when delaying or denying crypto ETFs. Chief among them are risks related to fraud, manipulation, and a lack of surveillance sharing agreements with regulated exchanges. These requirements stem from Section 6b(5) of the Securities Exchange Act, which mandates that securities exchanges prevent fraudulent and manipulative practices. For XRP, this means that regulators need to be fully convinced that its market can offer the same level of investor protection as traditional financial instruments. While these regulatory justifications are clear on paper, they raise significant questions about the real reasons behind the repeated delays. Some observers suggest that the SEC is reluctant to open the gates to altcoins like XRP due to pressure from traditional financial institutions or broader political considerations. Regardless of the underlying motivation, the outcome remains the same. XRP remains on the outside of the ETF market while Bitcoin ETFs thrive. It is important to note that this is not the first delay for these XRP ETF applications. Back in March, similar proposals were also postponed. At the time, industry analysts projected that the SEC would take the full 240-day review period before reaching a final verdict. Now, with this most recent delay, it appears that a decision may not be made until late 2025. This timeline suggests that XRP investors may have to wait well into the fourth quarter of next year before gaining clarity. For holders of XRP who are eager to see the asset gain mainstream financial legitimacy, these delays are frustrating. The approval of a spot ETF would likely attract institutional capital, particularly from retirement funds, insurance companies, and other institutional players who are restricted from holding digital assets directly. With an ETF, these entities could gain exposure to XRP within a regulated framework, potentially unlocking billions of dollars in inflows. Indeed, some analysts predict that if XRP ETFs are approved, they could attract between $3 billion and $6 billion in their first year alone. This would represent a significant portion of XRP's total market capitalization and could lead to increased demand and liquidity. More importantly, it would signify a shift in how the financial establishment views XRP, not just as a digital asset, but as a legitimate financial instrument worthy of inclusion in investment portfolios. But for now, the market must operate within a state of regulatory uncertainty. While Bitcoin has received its spot ETFs and seen billions in inflows as a result, altcoins like XRP remain in limbo. The disparity is striking. Bitcoin's ETF launch was met with enthusiasm from financial media and large-scale investors. By contrast, the delay in XRP ETFs leaves many wondering whether altcoins will ever receive the same treatment. Despite this, the delay may not necessarily be a bearish signal. In fact, some analysts view it as a sign that approval is inevitable, just not imminent. The logic is that each delay brings additional scrutiny, data collection, and market structure improvements. When the SEC eventually grants approval, it will likely do so under a framework that satisfies its most rigorous standards. In this view, the delay is not rejection, it is preparation. An additional angle worth considering is how these developments intersect with the political climate. As the United States approaches another election cycle, cryptocurrency has emerged as a topic of growing interest among policymakers. Both major political parties have begun to acknowledge the role of digital assets in innovation and economic development. While this is not yet translated into comprehensive legislation, it does create an environment where regulatory clarity could become a campaign issue. In such a scenario, the SEC may be under increased pressure to provide definitive answers, not prolonged delays. Moreover, recent filings suggest that Coinbase Custody would serve as the custodian for the proposed XRP ETFs. Coinbase Custody is a regulated entity with robust compliance protocols, including third-party audits and real-time pricing benchmarks tied to the CME. These features are intended to address the SEC's concerns around market manipulation and asset security. If approved, these ETFs could represent a turning point in how digital assets are integrated into the regulated financial system. Still, the SEC's caution may also be influenced by past market behavior. Incidents such as wash trading, spoofing, and price manipulation have plagued less regulated exchanges. Ensuring that such activities do not undermine ETF pricing is paramount. The SEC is demanding surveillance sharing agreements with exchanges and insisting on high standards for transparency and compliance. These measures, while time-consuming, could ultimately serve to stabilize and legitimize the market for XRP and similar assets. Another noteworthy detail is the potential impact of an XRP ETF on the broader crypto ecosystem. With institutional access, XRP could become a core holding in crypto index funds, robo-advisor portfolios, and even retirement accounts. This level of integration would signal mainstream adoption and could lead to higher price stability, lower volatility, and a deeper, more liquid market. In essence, an XRP ETF would not merely be a new product, it would be a milestone. Looking ahead, the best-case scenario is clear. The SEC approves the XRP ETF in late 2025, allowing institutions and retail investors to invest easily and securely. This would likely result in an increase in liquidity, higher trading volumes, and broader media coverage. XRP's presence in traditional brokerage platforms would make it more accessible to average investors, boosting both interest and price. On the other hand, the worst-case scenario is equally straightforward. The SEC ultimately denies the applications. Such a decision would likely result in a sharp, short-term sell-off, followed by renewed calls for regulatory reform. The market has weathered similar storms in the past, such as China's repeated bans on Bitcoin and the collapse of major exchanges. In all likelihood, XRP would survive, but the timeline for institutional adoption would be pushed back significantly. In conclusion, the SEC's decision to delay XRP ETF approvals is not a final verdict. It is a temporary obstacle in a much longer journey toward integration and acceptance. While the regulatory process may seem slow, it is also methodical. Each delay brings the market closer to a future where XRP can coexist with traditional financial products in a regulated, transparent manner. For investors, the key is to stay informed, stay patient, and prepare for the moment when the gates finally open. Because when they do, XRP may no longer be a fringe asset. It may become a pillar of the next generation of finance. Well, guys, that's all we have for you today. What are your thoughts on XRP? Get involved and let us know in the comments down below. If you guys like this video, then be sure to give this video a big thumbs up. Also, if you don't want to miss out on any new future videos, then be sure to click on the subscribe button and turn on the notification under this video so that you're notified the next time we upload a video on the latest XRP and cryptocurrency news. Until the next video comes out, you can watch our other videos about XRP or other cryptocurrencies. Thank you for watching, and we will see you again in the next video. Goodbye.